All right. Good late evening, early morning on Thursday for all the good peoples and even the mediocre and bad peoples. You're welcome to listen. All right, guys, let's get going. This one I did initially. I compared Defiance's MST, and I'm starting to use the underlying whenever I do this because I always talk about it and I think people need to see it. And I had the 2X MSTX and I had Misty. So I've come along and said, okay, guys, I know about IMST. They just bitwise. And they have one on coin and either BTC or YITH or something. I forgot what the third one is. Oh, it's on Maro, I think. Mara. So um, what I want to get to on this is a comparison. You're never going to have it perfect. Like obviously everybody has older period of time. Misty being, um, 15, 16 months old. I don't know how long it. So I went back here and I used 328. Well, MST comes along and they don't launch till 5.2. So I don't really want to keep moving all these guys up to 5.2. So consider that it's not always apples and oranges. The only thing I do is I show you what an annualized yield would be. So that kind of, it says, okay, well, this one's only been there that long, so it's at a 2.81%. So we got to multiply it by the factor of only being, 27 days. So I'm showing 62 days for all of these three. I'm showing 27 days for this guy. And this one, IMST, actually, everybody raved about the $7. But when you look at it, Misty's projected annualized yield is still slightly higher. So don't get too excited. But again, anything can change. These annualized, when you have, 62 days or be it 56 days, it's all subtle. So what I'm going to do here is take you through what they all are. And you saw that what I'm really saying is these are all the funds. I'm sure there's another one. Somebody asked me to look at IRMN. I don't know if it's underlying right now is MSTR or not. I'll get there. But I already had all this. I didn't want to add too much. And maybe it isn't. So I really don't know. Easily can look. So let's compare these on what they are and what they aren't. So I wrote a little bit over here and then I even put it in my comment field. So obviously MSTR is the underlying. What is that? Well, it's chairman and co-founder Michael Saylor. Everybody knows who that is. It used to be the CEO, but now he's the chairman, but he's a co-founder and obviously sort of the face, in my opinion, of BTC. He's what made me appreciate BTC. Before that, I really wasn't a crypto guy, and I'm still not an altcoin. And you just can't do everything. I can't be a guru in mining and miners and retired on that, and also be a crypto guru. You just can't, it's kind of like in computers. I know a lot about computers, a lot about hardware, a lot about software. But if I go to somebody that's 40 years in just communications and I had 8 years in communication, then my expertise and depth isn't, it's just common sense. All right. So, having said all that, let's jump in here and tell you what I do have. So, I went back on 328 and then I updated it to the close on 528. So, everybody's got a 528 close. Everybody's got their respective launch date, start price. So that gives it somewhat fairness. The issue always in that, guys, and I'm sure you understand it, if we start down aggressively and MST's period, it impacts these guys. They just had a little bit maybe longer time in the good time. And so I'd ask you to look at that and understand that. One of the big differences that stands out is there's leverage involved in here, but really only on two plays. MSTX, okay, is just a 2Xer that you can go out and buy on a lot of Right. So they're using leverage. They're not attempting to pay income, but ironically, when I did my due diligence, they paid, and I mentioned in this in the previous 1443. Well, if you divide that by 12 months, that's $1.20 a month. That's pretty that's a lot of pay when you're looking at these. This has had two payments on weeklies. Now they're going to average 4.3 payments, right, a year. That's what you do when you divide 52, right, by 12. You get 4.3, and what happens is every third month you get five payments instead of four payments. That's what it kind of works out, and you do the math, that's how you get to 52. And in the Yieldmax world, their monthlies are now paying 13 times a month, and depending on which group you're in is when you repeat. Like, I think it's group C just paid a second time in the month of May. They paid on 5/2 and they're going to pay on 5/30. And so the different groups hit a different months where their 13th month or 1 month has two payments. That's how it works. So you get a month of two and you get 11 months of one. So that's how you get 13. All right, guys. So just trying to educate you on that stuff because people write all kinds of things and they don't understand sometimes the basics. So having said that, this is a pure 2Xer. So we're going to go through the detail. I have daily results for every one of these every single day from 328, okay, if you will, all the way to 528, and these guys respectively when they launch. So we can look every day across the band and say, how did MSTR do? How did MSTX do? And you start to see most of the time they're matching their profile. So, having said that, we all know, well, most people know because Misty's super popular. They've applied for they've applied for the ability to use swaps, okay? So they're not yet doing that because my understanding is they're not yet approved. But I'll see it because I go out and I look at their daily activity. I haven't started reporting on it like I'm doing on Pulte and Coney, but I will. Um, but so we call that no leverage because they're not using swaps to create leverage because that's what MST is doing. And then on top of that, so they're 150 to 200%. Well, why is it a sliding scale? Because they utilize more swaps. And then the only one right now paying weekly out of IMST, MISTY, and MSTX and MSTR, because MSTR pays none. And also, guys, I did not use MSTX, okay, over here in a yield. I could easily go in and plug 1443 and then even, proportion it down for the 62 days versus 365. But I've been around long enough in stocks and all that in an amount of years of investing that URM's a perfect example of that. I bought it in 1920. I bought it in 2020 and had a huge dividend, either from 2019 or 2020. It paid like $10, and it was like a $40 stock when I bought it, and I cashed out it. I wrote some calls up at the 70s, and it was trading in the 70s, and I eventually sold it, and I collected the $10. Well, the following year, they either didn't pay or it went way down, and then the next year they didn't pay. Well, now they're back paying, but they're smaller. So that's what happens if they have an outstanding year with their swaps and trading. They get a bunch of cash flow and they basically have to pay it out. But there may be a year based on the underlying of their swaps and MSTR that they don't pay a dividend, whereas Yieldmax is going to sort of pay you whether it's return of capital or not. And a lot of times you see the NAV erosion um, effect. So I just wanted to be clear on that. So I did not use it, but I told you about it because I don't want somebody to say, hey, I bought it and I got this. So consider yourself lucky, but don't count on it, right? All right. So let's look at them further. So when I look at this, here's MSTR, right? No dividend, and I'm calling MSTX no dividend, although for, at the end of 2024, they did pay a dividend. Nothing yet in 25 because it'll come in December, right? So they have 2x leverage. But if you double this, right, it's not there yet. And that happens sometimes in the market. Misty, not bad, right? And this has not been a particular up period because if you look at most of them, they're up. But this is all based on since really 2 months, 328 to 528. So you got a 25, almost 26% return on MicroStrategy. You have a 31 and a half. Misty includes dividends, right? So they've paid 18.21, but their fund is only up in comparison 447. And I did want to show you annualized because these guys on a shorter period of time, but it's not that short. It's 4.3 versus 428. That's 5 days, guys. So got excited about the $7, but you got to remember their price also. And I think they went for a while before they paid. So they had about 6 weeks to collect income. Okay. It's a smart thing to do to get people excited in the market and buy in, but you got to weather the storm. You got to prove yourself over time. Now, there's nothing wrong with diversifying, saying, hey, I got 5,000 shares of Misty. I'm going to go out and play with 1,000 shares of my MST. I bought 100 shares of MST just so I could watch it and see it. And all it's done is go down. I think I bought it 21. It's paid twice, but it's paltry. It shows out in an annualized yield, even considering that it's only been in existence for 26 days. So that 281 jumps all the way out when you annualize it to 3804. But by the way, guys, my total return, I didn't play that game over here because it's unfair to new starters in that. But these guys, their total return is based on this. They're down 19% from 5.2, okay? And I did give them credit for the 281, the real yield percentage. But if they keep doing that, it's going to get better. But it's not, at this rate, it's not going to get better like Misty or IMST. All right. So how do these guys, what did they do? So this is very similar. IMST from Bitwise is similar to Misty's current synthetic and call spread approach. So maybe it's going to be close. Let's see. MST, I will tell you straight out when you look at the detail, and I'm going to go there. In an aggressive bull run in MSTR, MST is going to smoke Misty and IMST, mainly because its upside is going to be big. And I think that's why MSTY Yieldmax title has gone out and applied for the option. But don't just think they're going to go out and use that totally. It just means they got a plethora of tactics that they can use. And that's what they'll do. Just like the call spreads, they didn't run out and use call spreads every day on all of the funds. But they started testing them and playing with them. And now, for the most part, is what I see is call spreads because you got that element of insurance in there. But you pay for it. All right. So hopefully that helps. Let's jump into the details so you guys can see it. All right. And I kind of colored code, not everyone. So let's go to 528. So MSTR I'm going left to right because it kind of sets the pace. So it was down 2.14%. What did Misty do? This happens a lot. Misty doesn't go down. Typically, it's even or 70, 80% of what MSTR does. You may say, why? Well, the why is it's collecting some income. When it goes down and it wrote a call, it sold a call, that call is making money because you sold it for making it up. You sold it for $10 and now its value is 8.5. So the paper value and so forth, and that catches up by selling those. And that's how that necessitates, or that's how that outcome comes. The old saying is you can't protect yourself fully on the downside. If MSTR has a month and it goes down 60%, you're going to get 90 to 95% of that down movement in Misty. Why not the 100%? Because it's making still income. It's still selling those calls. And every time it sells them, every week it wins on all the calls. The synthetic is going to go down, which is really equal to owning the stock. It's going to go down 100%. So that 3, 4, 5, 6, 8% that you don't go down as much is because you made some money in selling calls. It would be the same for you if you sold a call. You go out and you buy a stock for $10. You sell a covered call for a month out for $1. And then the stock crashes down to $1. Okay. So you went from 10 to 1, but you made 1 on your covered call because there's no way, you know, that they're going to take the stock because you sold it up at a higher price. So you got an extra $1, but you got a 90% loss. You're not happy about it. All right. So let's go over. So what is Misty doing? Or I'm sorry, this is I when I add an IMST. Okay. So you got IMST in here, and what you want to do is look for the pattern. So you expect it to go down because it's very similar to Misty's approach. Okay, it's a newer fund, blah, blah, blah. So these are statistically insignificant, but they both went down, and they both should go down slightly less than MSTR. Now, what does your double guy do? He has no income that he normally tries to generate through calls. Okay, it's only through his swap trading that he gets a little income. Okay, that's how he creates the leverage. So he should be 2 times. Well, he is, right? 2 times 214 is 428. So he's right in line with that. MST. They say they're using, oh, I'll tell you what I just saw it. I color coded this for this very point. Now, what do all of these funds do except for MSTR and for the most part MSTX because it's only once at the end of the year? They pay dividends. What happens when you pay dividends on ex-dividend day? Your stock in the pre-market drops by that. So when it drops by $7, okay, this went from 59.6 to 49.12. And you say, well, Bruce, that's more than the 701 that IMST paid. Yes, you're right, because that's the initial salvo in the opening in the pre-market. They deduct the dividend from the last closing price and they go, okay, this is the open price. Now market activity, buyers and sellers send it up or send it down. Okay. But when you pay $2, $3, $4, $5, $7, you could theoretically pass it if MSTR just blew itself out, right? Just went crazy and drug your NAV up. But that's why I put a black and white indicator in here to indicate payouts, because you then can almost ignore. Why the heck was IMST down? If you said, Bruce, it doesn't, this is only down 750, it's down 17, ignore it. It's ex-dividend day. Okay, much more in line here with Misty. You should be close, a little bit less. And then what should this be? 2x. What should this be? Well, from 150 to 200. So that means they were in, they're probably, 100, or sorry, they're 150 to 200% leverage. They probably had about 180% leverage because that's about what it's showing me. It's showing me it's not quite a double because okay, seven, would be 15. That's exactly that. This one's 1547. So you can see that how this model works. So I can be pretty predictive to tell you. Now, most people here aren't savvy enough to go pick an income fund on top of MSTR and then go, oh, I'm going to trade out of it because I'm going to sell my Misty and I'm going to go into MST because it's a bull motor, it's a bull run in MSTR and BT. The bull run would be in BTC, dragging MSTR up. But a savvy, somewhat trader could do that in these funds. All right. Now you got short-term capital gain implications and blah, blah, blah. But you get it. That's why I'm doing the analysis that I'm doing, that not everybody can do this level of understanding. So hopefully it just educates you, fills in some gaps that you may not have thought about. And then you have situations. Here's a 3 point. Now, on the upside, normally MSTR beats the other funds except for the leverage funds, right? Remember what I was saying? Look for these guys to move up. Okay, you actually had Misty move up 408. Maybe they cashed in a synthetic. There can be some. There's no particular other implication. It's not that far off. Or I'm sorry, this is IMST. So you had a 3.41. They did nicely with 408 for IMST. Right. It's the following. You see, I do this first, then I do the change next to it, then the symbol, then the change. So the last one is MSTR. So still reasonable. And 341 is 682. Look at this, 683. Look at this, slightly less. So they say 150 to 200. They're proving it here that they're somewhere in between that leverage. All right. 473. 268. Very good, right? That's a nice IMST day. 422. You expect it to be a little below? It's a little below. What's that work out to? 946. Look at this, 941. I'm just doing it in my head, guys. All right. So this one, between the 150 and 200, probably 180. Okay. Here's 413 up. Okay. Look at this. How they have Misty did the right thing. So this one, maybe the options traders are still, they're outperforming Misty here on a down day, percentage of the drop, right? But they're not keeping up here. So the end result is what I show you on the first page. And as over time, we're going to see and know what they're doing. I'd have to go in and remember, we're lucky in Yieldmax. They give me sort of their trades if you know where to go find them. And then you got to know how to analyze them. And then you got to do accounting for analyzing to keep track of the revenue and all the rest of the results. So it's a lot of work. But it tells you more. Okay. So 413, 826. No, it got even a little more leverage. It got 833. Awesome. Right as you'd expect. Slightly lower, but in the game. So I could go on and on and on, but I won't. And then before we had MST, right? 524. They got a 221 play. Misty got 306, they being IMST. You expect this to double. 1048 would be the double, but that's all right. This one, how'd they do? 330, 660 would be the double. Close enough. Misty is beating IMST and following the upside. So that's why you track the detail and then you look at it. So that's what I can tell you right now, guys. Let me know your thoughts. If you got questions, something you didn't understand, and hopefully this just educates you. Look, when you have a fund like Misty be as successful as it's been, and it's captured almost a third of all the yield max assets under management, and we all know that MSTR has done fabulous and Bitcoin's done fabulous. I think if you go back and you analyze Bitcoin, as Michael Saylor says, the last 7 or 8 years or some period of time, he's saying you can expect a 65% annual return. Remember, that consists of possible negative years and super high positive years. So don't just, you know, bet the world on it, because you may catch a 30% down year and you put all your money in and you're freaked out and you sold. Trust me, when you're young or you're inexperienced, it's not an age thing, it's wisdom and experience in the market. I mean, I've seen young guys that are 30 that have been studying the market with their dad or their granddad and did it every day and are really, really smart people in the market. So it's not always youth, it's time in the market, it's trades in the market, it's investment time in the market. That's what creates wisdom and experience, like in anything, guys. All right, this is Bruce signing out. This is not financial advice. I am not a financial advisor. Always seek out a professional financial advisor before making any investment. All right, peoples, have a great Thursday, and we're heading into the weekend, and we're going to get paid on Group C. All right, guys, bye for now.